Here's right now with her take on the rally. Elyse Ausenbaugh is the head of investment strategy, JPMorgan Wealth Management. Trees don't go to the sky usually, though they seem to be going to the sky right now. The question is if there's somebody on the other end of the tree that's like with their axe or cutting it, and when that's going to happen, if it's going to.
Look, we think that 2025 is going to be a year to build on the strength of 2024's gains. While there has been some euphoria and kind of this optimistic knee-jerk reaction to the outcome of the election, what we're really basing our expectation for about 10% S&P 500 upside on is an improving fundamental backdrop. You've got broadening earnings growth, you have prospects for deregulation and lower taxes, and we see a lot of opportunity within the index.
What do you think of Warren Buffett building a $300 billion ark? Noah's Ark of cash. What does that say to you?
Look, he is known to be a value investor, and if there is one thing to be mindful of in this market, it's that valuations are high. I think, like Warren Buffett, we would encourage investors to get a little more opportunistic if we were to see a pullback and have some value opportunities emerge. But what we're really kind of basing that outlook on is the reality that earnings growth is going to continue. That's going to do the heavy lifting, even as valuations come down over the course of the next year.
You say even as valuations come down. Why do you say valuations come down?
I think, at 22 and a half times, they do look a little bit toppish. And so the good news is from 2025 to 2026, we think that you can get about 10% index level earnings growth. Every sector in the S&P 500 is expected to grow earnings for the first time in a few years. Right. And so that's what's going to do the heavy lifting versus 2024's composition of returns, which has been a pretty even split between the two. I
don't know if you saw David Einhorn's comments, but he basically said, look, if we look back 10 years from now, and not to be a market timer, but if you said this was the time you were putting a lot of cash to work, he said it'd be very unlikely that you would look at that and go, that was like the greatest time in the world to do this. Sure. So for those folks who've been sitting on the sidelines, they might have missed the train earlier, or maybe they just came into some money or something's happened here. What are they supposed to do?
Well, talking first.
Besides call you.
Well, yeah, of course, call us. But thinking first about equity markets, we do think that new opportunities have emerged. Kind of related to the outcome of the election, the financial sector would be one example of that.
And you don't think that that's already baked in?
No, we would be buyers into the strength. We think between the deregulatory environment, prospects for increased M&A activity, there are going to be further headwinds. But we're also encouraging investors to really look across the entire investment opportunity set. Fixed income might be a little tricky and require investors to be on their toes in terms of navigating it into 2025. But within the alternative investment space, looking at opportunities in real estate, infrastructure, look really compelling to us.
Okay, Elyse, thank you for coming in this morning.